Good morning, ladies and gentlemen. Welcome to Market Forecast, brought to you by Options University. This is Butch Shorak. It's Monday, August 25th, 2014. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, or solicitation of offer any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Well, let's take a look at the last week and see if the rise in the market that we predicted took place. And looking at the Dow, the NASDAQ, the S&P 500, and the Russell 2000, we see all positive numbers as we reached all new highs in the market. Percentage change for the week for the indexes respectively is the Dow up 2%, NASDAQ up 1.6%, S&P 500 up 1.7%, Russell 2000 following close behind at 1.6%. Looking at year-to-date numbers, we see we're in positive numbers for everything except for the Russell 2000, with the Dow up 2.6% and closing above 17,000 for the week. NASDAQ up 8.7% for the year, 7.6% out of the S&P 500, closing closer and closer to that 2000 level, and the Russell 2000 down 0.3%, the laggard in the overall market. Let's take a look and see what we're going to expect out of economic announcements as we look at the coming week. Looking at Monday, we see we have very little happening except for new home sales coming in basically at around 10 o'clock. Looking at Tuesday, we see durable good orders coming in, and we see the Case-Shiller coming in at 9 o'clock, both before the market opens. Consumer confidence coming in at 10 o'clock, certainly an important number for the market to consider. Wednesday, August 27th, nothing happening of any consequence. Looking at Thursday, of course, we have jobless claims every Thursday morning, giving us the weekly return on the jobless numbers. And then we have GDP also at 8:30, certainly capable of moving the market. Pending home sales coming at 10. And then we'll look to Friday, where we see personal income, and we see Chicago PMI and consumer sentiment coming in at 9:55. So a few things taking place this week, Wednesday being the lag day in the overall market. Let's take a look at last week and see exactly what happened, as we had a week where we were looking for a rise. That's exactly what we got. And we see the 30 and the 50 basically at the same level, 200-day moving average sitting way down there, and we got the rise out of the market that we were looking for. Friday being a bit of a laggard day, a big conference taking place in Jackson Hole with Miss Yellen being the keynote speaker. All right, let's take a little closer look and see what happened during the week as this upward trend continues. And we saw a big move up Monday, Tuesday, every day moving up higher and higher, and then Friday giving us a bit of a lag as the market closed at 1988.40. Looking at the Dow, we had a big week in the Dow as we saw the Dow closing above 17,000, and we see we didn't get all new highs out of the Dow. Let's take a look at the NASDAQ and see what that looks like. Looking at new highs, as we see a breakout out of the NASDAQ. We saw the NASDAQ leading as we saw it open on Monday and broke through those previous highs with a gap up at the opening on Monday. Russell 2000 continued its upticking as we saw the Russell 2000 showing us a bit more fluctuations, a little more volatility out of it, as we seem to be hanging around this 50-day moving average. Russell 2000, of course, our laggard, the only one not in positive numbers for the year. Taking a look at the VIX, we'll take a look at that VIX and we see exactly what we would expect to have happen. The VIX closed lower as the volatility and the fear took out of the market. Now let's take a look at our ETFs and see what happened to our bond market and a few of our other ETFs to see what some of those sectors did. Looking at TLT, our ETF for bonds, we see that we had a bit of a rise at the end of the week as the bonds have had a bit of a rally. We've got the 30 above the 50 above the 200 as we see the bonds holding up just fine in the overall market. Was there any big flight to gold? Well, we see there certainly wasn't, and it gapped down. All fear seems to be out of the market. No move to safety there as we look at gold. Looking at the volume in the market, what kind of market did we have? Well, we saw that we had a bit of volume on Monday, and then the rest of the week basically at about that same level, where we're looking at basically average volume as we broke up into new highs on the spider. Looking at new highs in the overall market. And looking at financials, XLF is our ETF that we look at for our financials, and we see it moved up, broke out, and gave us new highs in the XLF. So XLF showing good strength, the financials looking good. Much talk in Jackson Hole about where's the Fed going, what are future interest rates going to be, and that'll of course be of great interest to us as we move forward. What did oil do during this week where the market rallied? Oil went down, down, down. Not atypical for us to see that take place in August. So for those of you that are gold members, stick around. We'll take a look at our stocks to watch. For those of you that would like to see more free videos from Options University, go to www.optionsuniversity.com/free gold. With that thought in mind, looking for a week this week where we're going to see either new highs or we're going to retrace a little bit. There are some key elements to look at. We'll talk about that in the gold. In the meantime, welcome to Market Forecast, brought to you by Options University. This is Butch Shorak, Monday, August 25th, 2014. Thank you for being here. Talk to you next week.